Bank of England Governor Mervyn King was defeated for a third month in a push for more stimulus, according to minutes of this month's Monetary Policy Committee meeting published by the Central Bank today. Joining me on the line to discuss this further is John Hawksworth, Chief UK Economist at PricewaterhouseCoopers. John, what did you make of the Bank of England minutes released today?
Yeah, to be honest, there wasn't really, to me, a lot of news in the minutes. They were just confirming that it was essentially the same split as we've seen for the last 2 months, and more or less the same assessment of the situation. So there didn't seem to be an awful lot of news element in the minutes.
And how do you think markets will respond to the BOE minutes?
Well, I think given that there's not a lot of news in them, I don't really expect that it will cause any major movements in the markets. I think probably more significant this morning was the labour market data rather than the Bank of England minutes.
UK inflation for March remained unchanged at 2.8%, higher than the Bank of England target, and inflation expectations have climbed to a 4.5-year high. What impact will higher inflation have on the UK economy?
Well, I think clearly if you look at the inflation at 2.8% and then you look at today's data with regular pay rising only 1%, what it means is that there's a 1.8% squeeze on real wages in the economy, and that's obviously going to be a negative for consumer spending and growth, and probably is the reason why we've seen some weakness in the pound just immediately after those figures were released, because the growth is expected to be a bit lower, and that might in future lead to the Bank of England to be more likely to relax monetary policy, although not immediately.
And UK unemployment rose at the fastest pace in more than a year to 7.9%. Do you think this is further evidence of a weakening UK labour market?
Well, I think the data was a little bit unclear because employment was still broadly flat and the rise in unemployment seemed to reflect a reduction in activity. So effectively people were going from being inactive to looking for jobs but not able to find them. So it's a little bit unclear yet as to whether this is a real change in negative trend, and the claimant count of unemployment actually improved a bit in March. So there's somewhat mixed signals, but certainly the strong improvement in the labour market that we saw through most of last year, when employment was rising strongly, does seem to have flattened off. We're no longer getting that strong rise in employment. So we'll have to wait for a few more months of data before being sure what the new trend is, but it certainly seems like the trend has become a little less favourable, and that's also consistent with low pay growth as workers find it more difficult to get jobs and they're not able to push through pay rises. So I think generally it confirms the picture of a fairly subdued economy.
What is your growth outlook for the UK economy?
Well, I think in the light of all the recent data, I think we are assuming that growth will remain pretty modest this year, perhaps somewhere around 0.5% or 0.75%, something like that. So I think we are going to see some growth, but we expect it to be pretty modest, as indeed it was last year. So it's going to be a long, slow and bumpy ride to recovery, I think.
That's all for now, but stay tuned to Dukascopy TV for the latest financial news and updates. Goodbye for now.